So, first of all, we feel that there are real opportunities in the Russian private equity market. EBRD has invested in funds in Russia for 20 years, and we have made a 1.9 multiple on all the funds we have ever invested in. And that includes very early fund managers in the early 90s, some of them which didn't survive. So without survivor bias, our own investment has shown that it's really possible to make money by investing in private equity in the country. The secret is, like probably everywhere around the world, to pick the right GPs and invest in the right fund managers with the right GPs that have a clear strategy, a strategy that is adapted to the market opportunities that we can see in these countries. So and obviously team cohesion, track record, all the usual things that you would look at when you're picking any GPs. We feel that it's a market that's very well suited also for mid-market opportunities. The size of funds that are outside of the pools of capital that could be more directed or more related to oligarchs, but individual GPs with good track record and a good strategy. We've also supported in Russia very successfully first-time funds, and at the moment we're seeing some new groups emerging, new GPs emerging, and we find them very promising and very happy to back them. So we always back a mixture of first-time funds as well as follow-on funds, and there's loads of opportunities in Russia, both of growth, leverage buyouts, some venture capital as well, and also some mezzanine. So there are various opportunities of various products, very interesting. And I think it's always a very important thing to look at. You have to look at the track record, very definitely. The team cohesion is something that's also very important. Make sure that there is an incentive built into the fund team so that the incentives are aligned, that the GP is spread throughout the team, the carry is spread throughout the team. Very important to look at the strategy going forward. And for example, when we see a track record of a fund manager with a certain size transaction, we really encourage them to stay around that same size transaction or maybe go a little bit bigger, but the strategy, which consists of doubling the fund size each time and doubling the deals each time, doesn't really work. So the track record is one thing, but staying along with the strategy that have made a successful track record or staying not too far from it is also a very important thing, and making sure that the strategy continues to be appropriate for the opportunities in that country or that sector. So here my answer is a little bit biased, because the EBRD works in some emerging markets and not all of them. So EBRD works in Central and Eastern Europe, Russia, we just discussed, the former CIS. We also work in Turkey, in Mongolia, and we have started to work in 4 countries on North Africa. So obviously we think that there are wonderful opportunities in all these markets, and they are quite different. I would say that what I see at the moment is that Russia is continued to be growing steadily. We saw in the last couple of years maybe many investors rushing to invest in China, and we see China maybe slowing down a little bit, and we see maybe some young GPs who will not survive. I think Russia has, for those investors who are a bit more adventurous, you have some new GPs emerging which are really good, but you also have some GPs who are raising their 3rd, 4th fund, which are also really well established. So you have a depth of GP which is really good. Central Europe, we feel, is also a very interesting region. It's no longer an emerging market, and you have some GPs in Central Europe based out of Poland or in other countries, which are also have a really good depth of experience and have proven that they can continue to produce results. Some vintages for some of these CE fund managers were maybe a little bit more difficult, but they're now having the excellent experience of proving that they can manage difficult portfolio, which is also very good. And I think the opportunities in Central Europe offer better returns than you can. There's still more growth in these countries than you find in Europe, in Western Europe, but also some good serious GPs. North Africa, I'm sure, offers lots of fantastic opportunities, a new region for us. Turkey also has a little bit like Russia, some good mix of new emerging GPs and some follow-on. So we think overall these various regions in which we work offer different opportunities for different investors. So not everyone would have the risk appetite for Russia, but those who do are very rewarded, as we've seen from our return figures. In Turkey, there are obviously great opportunities. CEE is a different sort of profile, but being part of the EU is obviously not a pure emerging market, but the growth is still better. So great opportunities in all these regions where we work, we feel.